The first point is know what you own. I can't believe how many people own stocks they couldn't describe to an 11-year-old in 2 minutes or less why they own this thing or what it is. If you actually pin them down and you put a whip to them, they'd say the sucker's going up. That's the only reason they have for, and this is the normal kind of company that people buy. This is a very simple story. I own a lot of companies like this. They make a relatively mundane product. It's a 1 megabit SRAM CMOS bipolar RISC floating point data I/O array processor with optimizing compiler, 16-bit dual port memory, Unix operating system. Now, if you want a piece of shit like that, you will never make money. Never. But this thing goes from 12 to 9. Do you buy more? Do you walk around the block? I mean, do you call your friends? I mean, what the hell do you do with something like that? People buy this stuff. I mean, I buy stuff like Dunkin' Donuts and Stop and Shop and CVS and made money in all those. And Sally Mae was just here, right before me. I mean, there's a stock I bought that they had a great name, Student Loan Marketing. I mean, who would ever buy anything like that? I think if 100 people looked at Sally Mae, they would have bought it, but the 100 people wouldn't look at it because imagine loaning money to students. They hadn't doing anything with students. It was a great story. It was simple, and no one looked at it. So that's the kind of stocks I like to buy. But I'm telling you, people don't do this. And I'm talking sophisticated people, unsophisticated people. They don't know what the company is, what's the story. And it's very important to know it because it doesn't always work, and you have to keep posted. Now, here's a big point. Remember this one. It's futile to predict the economy, interest rates, and stock market. I mean, people keep trying to do this. I mean, this would be useful. I would love to know when in every recession. I'd love to know when interest rates can go up or down. I'd love to know when the stock market's going up. That would be helpful. I would like to get next year's Wall Street Journal. Unfortunately, you don't get it. So I've always said if you spend 13 minutes a year on economics, you've wasted 10 minutes. And all you need to know about the stock market is it goes up and it goes down. It goes down a lot. And that's all you need to know. Again, it'd be terrific to know what's going to happen in the economy, but I deal with facts. If inventories are going up, if copper prices are going down, if room occupancy is going the wrong way, people building too many hotels. I look at freight car loadings when I own railroad stocks. I deal with facts. I don't deal with people tell me something's going to happen in the future. You've got plenty of time. This is true of Sally Mae, this is true of Dunkin' Donuts, this is true of Stop and Shop. People are so insistent. I'm that way too. They have to fight it. They have to buy a stock. Let's see, it's now 501. I haven't found a stock yet today. I got to find the stock before sunset. You could buy Walmart 10 years after Walmart went public. Let's say you're a very careful investor. You waited. You said, I don't know if this company can make it. You waited for Walmart to roll it out. You could buy Walmart 10 years after they went public and made 30 times your money. 30 times your money. 10 years after they went public, they're only in 15% of the United States. I mean, why don't I take a leap of faith here? All they did for the next 3 decades was roll it out. You could buy Walmart. If the day they went public, you bought it, you would have made 500 times your money. If you waited 10 years in Walmart, you made 30 times your money. You got plenty of time in this business. Here's a good one. It's gone down this much already, can't go any lower. I remember when Polaroid went from 140 to about 107. People said, if you ever get Polaroid under 100, you got to buy it. Polaroid broke 100, and within 9 months, the stock was 18. So just saying, it's gone down this far, how much lower? I mean, it's crazy, but, it can keep going. There's a corollary to that that's even more dangerous. If it's gone this high already, how can it possibly go higher? Philip Morris, adjusted for splits, sold for 12 cents in 1951. And then it goes to 60 cents in 1961. So it goes up fivefold. You say to yourself, how much higher can this go? It's got a fivefold. They missed the power of Marlboro. They missed there's 220 countries in the world. They missed the cash flow of the company. They missed everything. This stock was a 100-bagger after going up fivefold. But people sold it just saying, how much higher can it go? Can't go any higher. They did the same at Home Depot. They did the same at Toys R Us. I did the same thing at Toys R Us. Just saying it can't go any higher. It's gone this much already. That's very dangerous, and don't use that one. And it's a very bad thing to do. Your great mistakes is selling a good company, and then doubles, then it triples, and it quadruples, because you make a lot of mistakes, and so those ones that go up tenfold, I call them the 10 baggers. So some of my mistakes just saying, oh my God, this stock is too high, and I was wrong. I sold Toys R Us
way too early. It went up 20-fold after I sold. I did the same thing at Home Depot. Those are probably my two greatest mistakes I ever made. Well, you ought to find out why you bought a stock. If you're saying it's a cyclical company and they're doing poorly and they're doing awful, you wait till things are getting better, they're doing terrific, and then you sell it. But with a growth company, you have to say, Walmart's case, 10 years after they went public, you could have bought the stock and made 500 times your money. Because they still are only in 15% of the United States. And they could say, why can't they go to 17? Why can't they go to 19? Why can't they go to 23? So for the next 4 decades, going around the country. So you have to say to yourself, in this stock, I have a 10-year story, a 20-year story. I'll be able to write that down and follow that. That's what I do with the company. And that's your decision. That's how you sell it.
I don't believe in diversification at all. I would own one stock if I could find one great stock. Diversification is a big mistake. I call it diversification. But what I do believe in is if I find 10 good stories, they're all equally attractive, I buy all 10 and I wait to see them unfold. It's like watching 10 poker games. 10 games of stud poker. You watch the cards turn over, story 3 gets better, story 6 slips, story 7 stays the same but it goes up 50%. So you sell 7 and buy 2. That's all I do. So if they're equally attractive, I buy all 10. Then gradually some story says, oh my God, this is getting better and better, and guess what? The stock just went down. So you keep watching 10 stories and magically, because of that rule of stocks going up and down a lot, then you load up. You really, take advantage.